Today I'm going to be talking about a topic that a lot of you will be fascinated by, all the sources of tax-free income that are available out there. Now, there are quite a number of areas of the tax code that Congress has created which allows for you to have tax-free income, and it's available for you. It's really up to you to take advantage of this. If you think about it, it makes sense that Congress added a lot of provisions that do have tax-free sources of income in the tax code because, of course, I'm sure many of them would like to take advantage of this. So let's go through some of them. One of the major sources of tax-free income that exists out there is the exclusion from taxable gains of your primary residence. In other words, if you sell your primary residence and you have lived there 2 out of the 5 years and you are single, you don't have to pay income tax on the first $250,000. Now, if you're married, it's even more. You get $500,000 tax-free. You don't have to pay any tax on the gain of your primary residence if you've lived there for 2 out of the 5 years. Now, if you think about it, this actually makes a lot of sense because let's say you have lived in a place, it's appreciated in value, and you want to move somewhere else. If you had to pay a huge amount of tax, it would actually be a discouragement from actually selling it. But not only that, it would mean that you would have less money to buy the next place, and it would actually mean you would actually have to downgrade your standard of living. So it makes sense that this is not taxed, because otherwise you would force people to really downscale their lifestyle if they were to move. So I think this makes sense. Another thing that's not taxable is when your employer buys things like health insurance for you. Now, a lot of you don't even think about this, but it's actually a specific provision in the tax code that says that the health insurance that your employer provides for you is not taxable. And there are a lot of reasons for this. There's a historical basis for this. A lot of it has to do with the fact that wages were once frozen. I believe it was in the 1940s, and so employers didn't really have a way to provide extra compensation to employees. So what they did was they actually just created this. They paid for employees' health insurance, and that's basically where employer provided health insurance started. And now today it's codified in the tax code by not counting it as income. Now, if you're someone with a lot of health issues, you definitely should try to arrange the situation so that your employer pays a greater share of your income to health insurance premiums, because it's not taxed. Now let's look into another thing. Life insurance. Life insurance proceeds are also not taxable, and it really doesn't matter the amount either. And there's a lot of reasons for this. Let's say there's a breadwinner and something happens. They unfortunately pass away, and it makes sense that this is not taxable, because if it was taxed, and some of these policies are what, $500,000, $2 million, something like that, that would mean that it would be more likely than not that this family probably would not be able to live on these proceeds for a long period of time, and you don't want them to end up on welfare at some point. So it makes sense that this money is just not taxed at all. Another thing that is not taxed at all is if you own real estate and rent out your property on a very short-term basis, like for 15 days of the year. That is not considered taxable income. Not only that, but you cannot write off the expenses for this property either if you're going to do that. And it doesn't matter how much money you make from this either. So it's an interesting part of the tax code. It actually even came about before Airbnb even started. So that's also an interesting quirk that exists. Quick pause. One thing that's important to note is I'm not a tax professional. This is not official tax advice of any sort, and always consult with an expert before following any of these ideas. You can actually also look up the tax code yourself, look at the regulations, or contact a tax professional. Thank you. Another wonderful part of the tax code, of course, is the Roth IRA, which I have mentioned in a prior video. Basically, if you had money placed in your Roth IRA, you're 59 and a half, you can do what you want with the money, and it is tax-free. Now, what I would recommend is not taking it out of the account right away. Basically, it should be something that you are slowly withdrawing, because there's no real rush. There's no requirement that you take money out of a Roth IRA, and it is tax-free. So it makes sense to allow it to grow as time goes on and to slowly withdraw. But no, everything from a Roth IRA is tax-free if you as long as you had used it with after-tax dollars, which is the way it works. It is a tax-free source of income. Another source of tax-free income has to do with health savings accounts, because you get a deduction for the amount that you're putting in to your health savings account. But not only that, when you spend it, it is also tax-free. See, that's very different from the Roth IRA, because you do not get a tax deduction for putting the money into a Roth IRA. It's just tax-free later on. Whereas a health savings account is double. The money you had put into the account is tax-free because there's a deduction from it, and when you spend it, it's also not taxed. So you get a double benefit. Another source of not taxable income has to do with gifts. Someone can receive $15,000 from anyone in the US, and that's fully non-taxable. Now, of course, a gift has to really be a gift. Like, if you actually did work to get the income, then it's not a gift, that's income. So if your family member just thinks they're cool and gives you $15,000 for like a birthday, and just for the celebration of the birthday, then that is non-taxable income. And every year it's $15,000. Another form of tax-free income is if you live in the states that do not have a state income tax, then you don't have to pay the state income tax in those states. And a lot of people who do make a lot of money, let's say in California, they can save a ton of money if they were just to leave their state and go to a state that doesn't have any tax whatsoever on income, at least at the state level. You still have to pay the federal level no matter where you live in the world. But in terms of the states, every state has their own income tax or doesn't have an income tax, and it's really up to the individual to decide if it's worth living in a state with a very high income tax. And people who have very high incomes tend to be very mobile, and they can decide, hey, this is not worth it. Another source, the last source that I'll talk about in this video of tax-free income, has to do with inheritances. If someone inherits, at this point in time, if someone inherits up to $11 million, there is no tax whatsoever on that. And there's a reason why. It's called the estate tax, or you can call it the death tax, whichever you prefer. It's basically a tax after someone dies, and it's when the money is transferred to their children usually, although it could be other people. So up to $11 million can be inherited tax-free at this point in time. I remember when it was a lot lower, it was like $900,000, but now it's been raised to $11 million for individuals. And that's another source of another source of tax-free income, and that is inheritances. At this point in time, up to $11 million can be inherited tax-free. There is no tax whatsoever at the federal level. And what I think is great about that is because if someone has developed a lot of wealth and they want to let their children inherit it, up to $11 million is completely tax-free, and they will not have to pay any tax on that. Another source of tax-free income has to do with scholarships. Scholarships are tax-free. People do not have to pay tax on the money they receive, that they use a scholarship for actual bona fide tuition and books and things like that. Although the part that you spend on room and board is not tax-free. If you spend on that, that is taxable. Okay, let's talk about another thing that's tax-free. If your employer provides a gym on site, like Google for instance, that is a tax-free benefit. But if they actually pay for a gym offsite, that oftentimes will be taxable. So it's an interesting thing how there's so many quirks in the way the law works. Another source of tax-free income are municipal bonds. Now, municipal bonds, in order to allow these cities and states to provide to get loans at a lower interest rate, than corporate bonds. One way of doing it is by making it completely tax-free. So if you buy like a bond of California and you live in California, then that is tax-free. And the reason why they do this is just because it allows them to pay a lower interest rate, because when you consider the tax considerations for people who have a lot of money, it actually works out, and it actually ends up being a higher yield dividend than a corporate dividend that is a higher rate but is taxable. And I actually used to focus on this quite a lot, because I was trying to be I was basically a financial advisor, and what was really important is you have to take into consideration that how much income one was paying in taxes if you were to recommend this. So if you're not making a lot of money and paying a lot of tax, you probably should not be buying tax exempt municipal bonds, because if you like bonds, then the corporate bonds pay a higher rate, and those are probably a better choice. And I'm sure there's other parts of the tax code that I haven't even delved into, and I think we should look into this together. Do you find some little quirk in the tax code that I missed out on? Let me know in the comments below, and we'll definitely look at this later. And thank you very much for watching, and hit the like button if this video was fascinating, and we'll talk again soon. Bye-bye.